Welcome to the Mainstream Mortgages Podcast. My name is Peter Paley, and I'm here with my two business partners, Derek Vandall and Colten Boudreau. And today's topic's all about credit. What is credit? Basically, credit is your financial reputation that the lender is going to see and help make a decision whether you qualify for a mortgage or not. So we want to delve into the finer aspects of credit, how you can make sure your credit score is going to be good, and tips you can take to improve it if necessary. So let's start off with Colton. Let's pick on him first today. What is the minimum credit score required by a lender for a mortgage?
So to keep it simple here, if you're putting 20% down or less, which is an insured mortgage rate, the minimum credit score would be 600. If the closer to 600, we'll just need reasoning why it's close to 600, whether it's debt load or, a couple lates or collections to just be vague about it. But technically speaking, 600 is the minimum credit score.
Okay, so you said less than 20%. So what happens if you have more than 20% down?
So then it really can open up options, right? And it really depends on your credit if it's bruised or if there's multiple lates, whether it's credit cards or mortgage lates. Even it can vary. But then we just take a transition to the alternative side or the private. So short answer is it could be 500, and some lenders would look at it, but you just need more down payment.
Yeah, that makes total sense to me. So, Derek, sort of piggybacking off what Colton said, like how does the credit score affect your interest rate that you get?
Well, going back to what Colton said, if you have less than 20% down payment, chances are that your credit score doesn't actually matter for what rate you're going to get. As long as you qualify, as long as you're good to go, then you're going to get whatever rate it is that you're going to get when you have less than 20% down. It's when you have more than 20% down where it is possible for your credit score to affect what your rate is going to be. And usually that's just for the alternative side. Like if you have bruised credit or that kind of thing, then the higher the credit score, the better rate you will qualify for in that case.
So, like, we're also talking about the difference between, um, like, the score's like so important and different things can affect it. So, a big question that we get from a lot of borrowers is, if you pull my credit, is it going to affect my score? And there's so many different answers on the internet, and different lenders will tell you different things. So, what's the true answer, Colton? What is checking my credit score going to affect my rate or affect my score? Pardon me.
Yeah, it will. If it will impact your score, but it's only by a couple of points, and people get really weird about that kind of thing. But if you're looking for a mortgage, we obviously need to check your score. So the couple points hit that it takes, it's obviously worth it.
So, piggybacking off on that again, Derek, like, is when you're shopping for a mortgage versus shopping for a vehicle, um, the impact to your score is less than shopping for a mortgage, correct?
Yeah, what happens is when a mortgage broker pulls your credit and checks your credit, the first time somebody does that, it's gonna affect your score by, like Colton said, a few points. But if somebody, like let's say your mortgage broker needs to check your score again, then there shouldn't be an impact as long as it's within a 30-day period. At least that's what we're told by the credit reporting agencies. So you can shop basically, but on the topic of shopping, if you are using a mortgage broker, that mortgage broker just needs to check your score once usually, and then they can use that for multiple lenders. So now you don't have to worry about your score getting hit by shopping at all the different banks and the credit unions and all that kind of stuff.
Let's try now to shift over and talk about the scoring process. What are the things that are going to improve my score, and what are the things that are going to lower my score? Colton.
Yeah, so I'll start with what will improve your score, and that is one, if you can pay off your credit card balances in full every month, that would be perfect. That's a perfect world, right? If you can't, just making sure you're making the payments on time every month, whether it's the minimum payment or if you're putting extra towards your balance. And just keeping in mind that the smaller the debt load you have on your credit cards or your lines of credit or even your car loans, the better. And it will help you qualify for more. I'll let Derek answer the negative impacts.
Sure, but I want to go more on what can improve your score. How
Okay.
does using credit impact your score in relation to to the limit? Like, how does the balance versus the limit impact your score?
Yeah, so most lenders, insurers, and even credit card company, or sorry, like Equifax, the credit entity, they say about 30% of the actual limit is to be used every month, and that's kind of the sweet spot, they say. So anything over the 30% threshold could have a negative impact on your score, whereas underneath that 30% threshold, you'd be okay.
Sounds good. Uh, Derek, now let's talk about the negative impacts on your credit score. What
Yeah, so
can lower
Colton,
my score?
the obvious ones are basically the opposite of what Colton said helps your score, right? So if you've got your balances low on your credit cards and your line of credit, that's a good thing. But if you have high balances compared to the limit, then you're going to look like you're relying too much on your debt, which would negatively impact your score. Another one is if if you're making all your payments on time for a very consistent amount of time, the opposite to that is if you have late payments, that's also going to lower your score. There's also other things such as judgments, collections, consumer proposal bankruptcy that will obviously lower your score quite a bit. And the last thing I will say about what can be negative about lowering your credit score would be if you're constantly trying to qualify for debt. If you have too many inquiries for car loans or mortgages or lines of credit or credit cards, that could also look bad and it affects your score negatively.
That's very helpful to know. And so now let's say I'm a person that has a very bad credit score. I wasn't taught any of this in school. I didn't get any good guidance from my parents or family members. Partied it up through my 20s, had a few credit cards get closed down on me, go on collection. And here I am, a responsible person now, uh, much later in life, and my credit still hasn't quite repaired, and no one really showed me how to do that. Like, what steps could I take? Say I have like a 550 credit score, I have outstanding collections, and I haven't really reestablished my credit. My reputation's in the tank from the lender's perspective, but I have a family, I have kids, I have a great job, everything's good. Like, what can I do to improve my score, Colton?
So one, like you stated, if you have collections, pay them off as soon as you know, or as soon as you're made aware, right? So the story behind the collection is always super important to a lender and an insurer. And we help clients repair credit all the time. So we can send reports directly to Equifax showing the payment's been made, which will help impact your score, right? So obviously, paying out all the bad debt if you can, or paying the collections, the judgments, as soon as you can is super, super important on our end.
And what about like applying for new credit?
Yeah, so the main thing is if you had derogatory credit or late or whatever it might be, reestablishing your credit as soon as possible is very, very important. And then just getting back on track, right? So if you can pay out those things, get back on track and make qualifying payments on time, then your credit score should increase over time, right? It's not going to be quick. It's a marathon, not a sprint, but the sooner you start doing it, the better it's going to be in the long term.
So, with my bad credit score in my example, I'm not going to be extended credit very easily. So what can I do to maybe get a credit card?
Um, there's different options, right? And it really, in the terms of qualifying for a mortgage, it depends. Like we kind of alluded to earlier, if you do have that 20% down, then alternative lenders can look at your file, even if your credit score is shoddy. There are solutions that we can provide um, to help you out.
Okay, for sure. And now, Derek, now I'm a new person and I have lots of money. I've saved money. I don't believe in credit. I've never had a credit card. I paid my car in cash. I'm a cash person, but I have a great job. Everything's going well, but I don't have a credit history. Well, how's that? What's going to happen to me?
That's a really great question. We also have people who are new to Canada who come and they don't have established Canadian credit, right? So these are things that we run into. We can use on our end, we can use something called alternative credit history. It's we look at 12 months of your bank statements and just kind of look for monthly obligations that you're paying. For example, an MPI insurance or rental payments or even a gym membership, that kind of helps out too. If you don't have any of those things whatsoever, then you're kind of hooped. You got to start establishing some sort of credit. And one way to do that, if like you said, you're not qualifying for a credit card, there is such a thing called a secured credit card where you can, give the lender, say 500, $1,000, and they'll give you a credit card for that amount of limit. So it's kind of like you've got a credit card, but you're not really borrowing it. It's almost like you're borrowing your own money. But the good part about that is that it goes towards your credit history, and you can start establishing credit that way.
And so, in either case, like me as the person who's saved his whole life and no credit, or the person who had damaged credit from my 20s, how long is it going to take to improve my credit score to a point where a lender is going to look at me? And let's just, for the sake of this conversation, say I only have 5% down.
Yeah, so the absolute minimum that we've seen is 6 months. Uh, Usually everything kind of has to come together for that to be the case and for 6 months to work. Uh, Typically speaking, lenders are looking for at least 1 year, and ideally they want to see 2 years of established credit. That's the ideal scenario.
Colton, did you want to add anything to that?
No, I don't think so. I think I was just going to go back to your previous point about establishing credit sooner. I was
Mhm.
one of those people that didn't believe in debt or credit cards.
I
And
know.
you're not taught this in school, right? You're not taught these things.
Yeah.
And it was a real awakening when I graduated college. And maybe my parents might have should have taught me earlier or something, but coming out of it, I had no credit cards and I had to establish my credit. And I did that secured credit card just to quickly get a credit score moving in the right direction, right? And I guess I could just go into the biggest takeaway of credit is even if you don't want to use credit or you're kind of against it, get a credit card and just put your gas on it or your phone bill every month and pay it off, right? Because something is better than nothing.
Okay, and now let's talk about, like, we look at credit bureaus every day and we find many reporting errors on credit bureaus. So, as mortgage brokers, what can we do to help our clients when we find a reporting error or need to correct something on the credit bureau?
Yeah, so I kind of alluded to that a little bit earlier.
Mhm.
We can contact Equifax directly, and as long as we have confirmation of whatever the issue is, or something that needs to be fixed or corrected or paid out, or it has been paid out previously, we just send Equifax confirmation that will just say that this credit card has been paid out 5 years, but it's still reporting on your bureau. Then we send it into Equifax and they correct it on their end. We repull your credit, and sure enough, it'll show a zero balance, and that obviously will help your score. And it's super easy for us to do, and we do it all the time.
And happy to do it because it
Yeah,
really helps our client for the future. You can never figure out why a bank or any other financial institution would overlook something to get the exception, but just have it there to keep coming up and prohibiting their clients from getting any credit anywhere else. Like it just seemed crazy. It seems crazy to me. So we talked about this being your financial reputation, what affects your score positively and negatively, how we can improve our score, and and steps we can do to establish our credit using a secured credit card. And um, what we do as mortgage brokers to fix it. Is there anything else that I feel that you feel that I'm missing when it comes to credit?
I think we hit on a lot of the main points and just really wanted to allude to how important credit is. And some people might not understand that or realize it. Again, establish credit, pay your credit cards, the minimum balance if you can, on time every month. And if you can, pay it off just directly after you use it. That's kind of always been my advice.
Yeah,
Um,
and sorry, I'll just interject as well. For all the people who maybe had like your scenario, Peter, where you were in your 20s and you did some crazy stuff and maybe it's a little bit regrettable, but now it's on your credits history, right? If you have something like that, like a bankruptcy or judgments or collections, a lot of people ask, well, I was told that that is only on my history for a certain amount of time. And that is true. There is a certain amount of fact there. Generally speaking, that will only be on your history for about 7 years. But there are exceptions to that as well, where a bankruptcy, for example, if you have another bankruptcy, that will be on your history for 14 years. So it can be pretty debilitating for certain things.
I just thought of something while I was just sitting here about tips that you can do to sort of set it and forget it. So if you get like a car loan or a lease or something, those payments are automatic. But most people don't know you can also do that with your credit cards and lines of credit. Most credit card companies will be able to offer you uh, a payment plan where it'll take either the minimum payment that's required or you can pay your balance in full every month. So if you don't have that set up on your credit cards right now, I really strongly recommend that you do that. I did that years ago. I've never really had to worry about ever missing a payment on any credit and have a pretty good credit score, 800
Mhm.
plus. But I know Colten probably has the best credit score out of all of us. Uh, I just thought I'd put that tip in there because it's one of the best ways to do it. And when we're advising our clients on a daily basis, that's if I do see some late payments on credit cards or other payment facilities that are revolving like that, I just say like go set up the automatic payment. You'll never have to worry about it again, and your score will automatically improve. Another tip I'm going to add here, if your credit score is maybe a little bit depressed but still satisfactory, um, a clever way to get your score up is to actually increase the limit on your credit card. If you have a $5,000 credit card that's near its limit, and the credit card company feels like extending you another $5,000, that means your credit utilization will go down below 50% and your score will automatically go up. Little trick of the trade, but it does work. I think if there's nothing else we want to discuss with credit, we'll wrap this up. So, again, this was the Mainstream Mortgages podcast. If you have any mortgage questions burning a hole in your brain, please reach out to us. You can reach us at by phone or text at 431-482-2187 or visit our website at mainstreammortgages.ca. Thanks for listening today.